the Ministry of Finance said that with the GST, the inflation caused by it will only be temporary and short term, basically. How true is that?
I guess it's just perhaps their survey on how the other countries who have implemented GST or VAT has gone through. It is shown that obviously there will be a certain inflation thereafter, just after the announcement, just after the implementation. Thereafter, once market forces comes in, then it should then comes down. That's what the survey of other countries has shown. Perhaps that's where
basically, so based
the governments are using that. Yes.
But will it go back to how it was? I'm assuming not, right?
Not essentially. It will be not that way. I guess it's now depending on the baskets of goods or which one are you consuming more in your own portfolio. The one that obviously under the zero related list, it should comes down to equals or even lower. But those that is of the luxury goods and all those things, I think obviously the price will sustain a bit more increase. It's not going to come down to the old level.
And based on what was tabled, the information isn't as exact as you would like. It's not listed out completely.
Yes, where we coming from a tax professional is that we were hoping more on a more conclusive or more concrete announcement on how the full GST zero rated lists were or are, exempt supply lists are, so that we can obviously advise our client accordingly, because the businesses are now in preparation, so they need to know exactly the details is where obviously we need in order to obviously implement, change the accounting software structures and all those things to ensure that they are ready for GST, because they also need to know what is actually finally zero rated and exempt list to do their own cost analysis on the final pricings of how post GST will impact their own pricing.
So assuming we're SME that makes more than 500,000 a year and GST will be applied.
Yes.
What is the process? So first we get registered.
Yes. In a nutshell, how the GST works is that if you provide a goods, if you're in a business and you provide a goods or services that exceeds RM 500,000 a year in a given financial year, you are required under GST law to register yourself to be a GST registered person. Okay. Once you're a GST registered person, when you sell your goods or services, you need to obviously account the GST, the output GST, right? So for SME that obviously exceed the threshold, they have to comply. The question is, some of the comments coming through is they don't know the cost of complying so high, and they don't know how to get around doing it. So it's actually the government has actually announced certain grants and certain incentive in terms of subsidies for accounting software for SMEs. So it's actually how to get to that kind of subsidy or grant. Perhaps the government needs to be a bit more transparent on how the SME can get a hold of it. Maybe make it easier on how to get hold of these training grants and the subsidy for the ICT for all the software that's GST. On the other hand, for people that's below the threshold, you can obviously not required under law to register, but the important thing to note is that if you do not register, the input tax that you suffer in doing your business, producing your goods or services, then get stuck with you, get absorbed. You can't claim it back. So you can't claim it back, obviously the cost of production goes up. It may be necessary for you to push up your final pricing to your customer. So that's why it had the inflationary impact per se. But if you volunteer to be registered yourself, all the input tax then can be claimable because it's a pass-through cost. Because you are businesses, you are not the end consumer. It's only the end consumer that pays the final GST in a GST framework. So that's why the message perhaps to the SME is that they need to evaluate, right, really how big is their input tax costs if they don't volunteer to register themselves. That is where you need to start. Evaluate where your input tax cost is versus the cost of complying. The cost of complying is obviously been subsidized by the government grant. It's just how to get that. Yeah.
And also, judging by how much time there is before GST is implemented, do you think there is enough time or enough notice for people to actually start complying or start working towards it?
Typically, there's always not enough time on everything, given if once it was announced last time, it was actually they gave us 18 months since the last budget. So now it's already 1 year off. So we are less than 6 months before 1st April. The message is obviously, if you don't start now or any day, you don't get started. So the message is actually just take the step to get started, because there's not always enough time to make sure everything is complete. It's just, to give you an example, China, when they started to announce VAT early this year, they only give businesses 3 months to get ready, and they have already started enforcing it. So to answer the question whether there's always enough time, there's always, I don't think there's always sufficient time for every single aspect to be there. But the major thing is that you get the major parameters in first. Then obviously you tweak along the way as you move into the effective dates. If you don't do anything, no first step was taken.
For purposes of NGOs, many of which are actually registered as companies, or even for us as a think tank. So companies limited by guarantee, we will still have to pay the cost of products that we buy, and so we have to absorb those kinds of costs.
The main criteria to establish yourself is whether you are a sole proprietor, whether you're NGOs or all this, whether actually what are you supplying? Are you supplying that's in the cost of a business? If what you're producing in terms of goods or services are not a supply that is meant in the furtherance of business, then even if you want to volunteer yourself to register,
then you will not be...
there's nothing for you to claim it back. The only thing you can claim back input tax is when you have an output.
Right.
You got to determine your own profile.
Sorry, I'm making use of like free consulting time here.
That's okay.
So based on what we know so far, who are the biggest winners, corporate winners maybe? Like, is it the SMEs or big corporations?
In terms of what? In terms compliance with the GST? Compliance, I think in terms of the normal businesses and it all actually depending on where your current cost profile is. Because now we have the sales tax and we have the service tax, which is unclaimable back. It's a cost to the company. So let's say your main bulk of your, let's say a factory, a manufacturing concern. If the main bulk of their raw mat that they will purchase now carries a sales tax now of say 10% or even 20%, that one is actual real cost to them. So they costed it with the sales tax of 20% in there, then they obviously make their own produce and they sell. But assuming you are in this business and the raw mat is now, sales tax goes away, the 20% goes away, with the GST comes in 60%, but that GST is claimable back. So effectively it's no cost to you. So effectively, your actual cost has dropped by the real sales tax cost. So that kind of industries may obviously enjoy a lower effective cost of production. So actually, on a nutshell, you have to see where is your main cost first. Then only you see whether how effective the GST, whether net impact to it. On a very general basis, it's supposed to be a flow through, because you are not the end consumer, a flow through for a general entity. But obviously, where there are certain industry that is affected in terms of costing because they are exempt supplier. Private healthcare, private educations are being one of the two category mentioned. So it depending on where you are in the economy.
Also, there are arguments that because GST is replacing the government tax with 10%, certain goods the price would go down. In practice, how realistic is that?
That's why if obviously if you hear, let's say for a recent example on how the car price is supposed to come down, on one side the association on the buyer side of things, the car buyer were hoping that, or rather expect that it will come down. Or rather, perhaps to correctly say, the government is saying that based on their study, car price will come down because sales tax for imported cars is at the moment 10. That will go away, replaced by 6% GST for car dealer who bought in the car. But the 6% is an input tax that is claimable. Because when they sell car to people like us, we will have to bear the 6%. So they are saying that effectively government is in a way through their survey is saying that through their study is saying that 10% goes away, 6% is claimable back. Logically, you should reduce your price lah. But on the car manufacturer or dealer side, they say not necessarily true, because there are other cost factors. So they use the recent increase in petrol price as one of the factors, because it's not only sales tax is only one element of our full cost structure. That's what they are saying. So I guess again, it all boils down on how your actual cost structure is. So generally, we're purely looking for GST perspective. That kind of scenario should reduce your cost. But the car dealer is saying that you need to see other type of costs, fuel price lah, whatever. So,
but could that be regulated? I mean, because it feels like it should go down. But if it doesn't, I mean, could the government sort of step in and
say
that's
exactly what the Anti-Profiteering Act is all about. Plus, obviously now here, they are beefing up their GST auditors. Price list is going to be coming out for consumers. The essential price guide, the shopping guides, and all that. So those are some of the measures. I guess it's more how effective that enforcement of the Anti-Profiteering Act is. That's the critical one, in order to ensure that the supplier and the seller does not take advantage of GST here. Everything goes up by 6. So that kind of very general statements. That's what hopefully that will work with the Anti-Profiteering Act and the shopping guides on how much it should be paying for such things. So we will hope it works lah, because yes, people could easily take advantage and say GST comes, everything up by 6%.
And also in terms of awareness, like the customer needs to know where GST is and where it's applied. Let's say if I'm a company making less than 500,000 a year, I could still technically charge GST, but not just give it to the government. I keep it for myself.
That's true.
So in terms of so to get around that sort of loophole, because it's going to happen. I mean,
okay.
So how do you think the government, what should be in place to stop things like that from happening?
Okay, what are the measures they are trying to do now in customs is that obviously there's a custom portal that ones can just click in to check whether a GST is whether a merchant or whoever the supplier is a GST registered person.
Okay.
Let's say you go in today and you just click KPMG Tax or KPMG, that will show up because we have registered ourselves. So this is supposed to be the test. The question is how many people does that to check before they pay, right? People and consumer like us perhaps wouldn't do. Businesses may. So one of the work that we do is obviously advising businesses, because we both do with corporate rules. So we were advising that our client, the businesses, should check before they just pay their supplier.
Right. Yeah.
Keep a vendor, keep a master supplier list or whatever. But you're right. Whether laymen like us, consumer on the street, whether they check every single invoice people do, it remains to be seen.
And in terms of accepting GST, I think we can't avoid it. It's coming. It's unavoidable. But in other ways of sort of broadening the tax base, like we can emulating other policies that other countries do, maybe like inheritance tax or taxing the rich more. Could that be done in Malaysia as well?
Wow. Okay. I guess okay. The main bulk is obviously the broad-based consumption tax. I think that's essentially been used in most of the countries. Inheritance tax and all this wealth tax. That one, yes, one way to measure to have that more funds, but I guess that one is the most sensitive from a political and all those things point of view. Yeah, so I'm not sure whether that's the right time or whatever.
Just to reiterate that. After taking into consideration the cost of BRIM and the cost of actually administering it, I'm not sure how much government will actually have remaining. So based on the speech yesterday, I think he said that after you take into consideration BRIM, you only have, and then deducting the foregone amount from the sales and service tax, you only get about 960 million left. And this is even before talking about the cost of administering it. So 960 million is actually not very much. I mean, it defeats, I think, the original purpose of actually increasing government revenue. But again, this is an initial calculation. Again, it's, I think, the first year, so we will have to see several years down the line. And I think you talked about other forms of tax, because the Pakatan Shadow Budget actually talked about the inheritance tax and capital gains tax. I don't think that will be very popular, especially amongst the corporates, because if you look at capital gains, I mean, it's not just about capital gains, but if you're talking about capital, you could actually even call it like a capital formation tax, because capital is needed in any kind of business. And I think civil society needs to be reminded that, you know, it is actually companies that start off entrepreneurs, or who are maybe even giving seed money for social enterprises. Social enterprise is something that we would like to support. You're talking about individual people who want to come out and do small businesses and so on. And if you're taxing them, philosophically speaking, it means that you're disincentivizing them from actually eventually making a profit for even social purposes. Yeah, so it's a bit of dangerous ground, I think.
How long until we sort of step out of being like the deficit? How long until, is there a estimate, or?
I guess the government's aim is by 2020.
2020.
Right? So do you have
if it's
your
1% each, well, 0.5% each year.
Will we get there, 2020?
Not if it's a 0.5% each year. So I think it will still.
This year's at 3.5.
3.5 this year, and then they're targeting 3% next year. Yeah.
So you're optimistic?
Not really.
Not really?
I mean, not to reduce it entirely to zero by 2020. I think that would be quite a challenge.
But as long as it's on a
downward.
yeah,
Yeah.
that's what they need to drive it up.